All right, fellas, let's get down to today's stock market activity. We just did not have much of a chance today whatsoever because we saw significant weakness around the world as we were tucked into our beds last night. We awoke to, well, I'll tell you, I'm looking at my notes right now. My first stock update at 5:23 this morning, the NASDAQ futures were down 800 points. 800 points. Worst level we hit about 919, if memory serves me correctly. But again, it started overnight. What had happened? This is exactly what I warn all of you about, right? And that is you wake up one day and all of a sudden the traders, they don't want a certain segment of the market. And today or last night while we were asleep, they decided in South Korea, in Japan, in Asia, throughout the Asian markets, so on and so forth, they decided they didn't want semiconductors. No specific reason behind it. You can say whatever you want, overvaluation, whatever the reason is, they did not want it. So that's what set the table for us today. The Dow was kind of hanging in there all right. It was down a little over 100 points for most of the pre-market session, almost 300 at its worst level right before the opening bell. But it was the NASDAQ that had so much concern. S&P was also in triple-digit decline right before the opening bell, down about 111. So we didn't have much of a chance, at least in the pre-market session. But all of a sudden, stock market opens at 6:30. Everyone went, you know what? Maybe this is overblown. NASDAQ only opened down about 350 points. So it improved about almost 700 points just from literally that last report again at 6:23 to the opening bell at 6:30. Just bizarre. So the futures were off a little bit. Let's just say that. So then we start to get into a focus and say, okay, really what happened? So I dug a little bit deeper, and I mentioned this many times on the stock updates this morning. So if you're missing those, please join us. I do the updates at 23 and 53 after the hour, from 5:23 all the way up to 8:53. So you're hearing live action what's going on. But really, what I uncovered was today was nothing more than a rotation, right? Here's what I mean by this. You've heard me use the term many times when we get into the end of a quarter called window dressing. These are where the institutional portfolio managers say, I want to get rid of this stock and I want to bring in this one to make it look good on my clients, end of the month, end of the quarter statement. Okay, a little bit of a game. You've heard it a million times. But in reality, what really also is happening is a reallocation. So remember, as we've said many times, these institutions that control the market, they have mandates, right? If they are let's just call it a 60-40 manager, that their mandate is, I can have no more than 60% in equities and no more than 40% in fixed income. At the end of the quarter, they need to rebalance. Well, with the strength that we have seen in the month of May, predominantly, June's been a little bit choppy, but also in April, I promise you those allocations are way out of whack, right? And what started maybe as a 60-40 portfolio at the beginning of the year, probably now is a 73, 74, 75 percent portfolio on the equity side. They can't do that, right? That's not their mandate. It's not their investment policy statement. So what they do at the end of the quarter, they go, okay, let's say they end up with make the number simple, 75% equity allocation when they're supposed to have no more than 60. So what they'll do is they'll sell off the 15% to get down to start the quarter to the 60%. Okay, pretty simple. So what ends up happening is they pick what areas had the greatest gains for them when they're doing this portfolio reallocation. Well, what area, Mr. Clark, has the biggest gains right now? Semiconductor AI related, right? I mean, it's really that simple.
Anything tech.
Yep. Yeah. SanDisk, Micron, Lam Research, names we talk about all the, literally almost every day on this program. So they dump those, right? Because they have great profits. They reallocate, come in. And then also what they do is they have to rebalance based upon sector, allocations, right? That sector, that technology sector, and we can break technology down into many different areas, but let's just call it the technology sector, also got out of whack. Remember, there's 11 sectors in the S&P 500. So then what they do is they go, okay, I'm overweight. Maybe I can only have 8% in tech. Well, geez, look I'm at 20% because of the gains that have happened in the previous 2 months. So they sell off the hot area. In this quarter, it was tech. And then they redeploy the capital into other areas like the Walmarts and the Home Depots. We saw really good strength today. I mean, Johnson & Johnson was the second best performing stock in the Dow. Verizon was the third best performer. Procter & Gamble, the fifth best performer. Travelers, Walmart, so on and so forth. But what was at the bottom of the list? It was, let's see, Apple was the second worst performer. I'm sorry, not the second. It was, I don't know, about the sixth or so. NVIDIA was the absolute worst performer, down about $8.61. You had Honeywell, which had a phenomenal quarter, down $5.74. $0.54. Goldman, which had a phenomenal quarter, gave up almost $12. So you get my point. So that's all today was. There was nothing fundamentally different, nothing fundamentally changed in the markets, the economies, et cetera. It's just end of the quarter, end of the month portfolio rebalancing. Now, how long can this last? I keep getting that question a lot. Typically, it can be as short as one day, like today, or it can drag on for maybe 2 days. It just depends upon how rapid the selling goes. But generally, it is not a long-term trend by any means.